saying it's going to do that.
Let's try it out on YouTube here. Hi, YouTube. I'm going to let the chart be the star today. I don't need to put my ugly mug on there. But let me make sure it's broadcasting correctly. Yeah, we're good. Is that cutting off the left side of my screen there?
I can't really tell. I'm trying to look at your right side to tell and determine. Oh, it looks like it's where it's supposed to be.
Okay.
If the furthest of your left screen is the open, and I can see spy on your top where you are now.
There we go. Tweezer ahoy. Oh, that's going to range twice? Wow. Okay.
Morning star on the 10-second. That's a big green candle on the 5-minute chart with no wick on the MES. And it's in a critical zone on the spot, an area I had marked out.
If this does what I think it does, we get a 5-second wolf wave. Boop, it's doing
The other thing you get with these morning stars, like we talk about all the time, is that when you get that, looks like it's going to be a morning star, and then the second candle, I always say, watch it.
Right.
Because look what it does. You get that on a morning star or an evening star sometimes.
That was a 5-second wolf wave, buddy. I love it.
That's a pretty strong move on this bearish candle if it lasts for the next 3.5 minutes.
Slope that whole wolf wave. Watch this. See ya.
Whoa, it's gonna last.
I love the wolf wave, dude.
Low, Jack.
Seeing a wolf wave on a 5-second chart, that was cool. So you got your high, low,
oh,
high,
I did not
low.
notice that. Yep.
You go to first high, second low, and draw a line. That simple. Bearish wolf wave, ahoy. And you can extend them forever. I mean, they'll go way further than you think.
All right, now we're at the open of the 20th. So bye-bye.
And then we got this angle here where you'll see a
news event. News event, Jeremy. That's what just happened.
Extended the trend line from our descending megaphone here all the way out. Have at the regression line, and we can also have at the angular support line, and we can run our wolf wave all the way down to the bottom of it. Wolf waves are neat because they give you a great idea of what's going to happen with the trend. And by the time I finished drawing that, it was like, bam, I'm going. So when you get to inflection points, you'll find an angular support here. It bounced right off that sucker. And all that was an extension from way back here. And you start to see these set up, you know where they're gonna bounce. Now we got to decide, okay, do we break the wolf wave or are we going to still trend? Well, this is a retracement so far. It goes right to a control, right in this area here. That's this little dude right here. And we can set up a range in here. If it breaks this, we know where it's going. It's going right to this line. If it rejects there, stays in the range for a minute. Not many people that I know who use wolf waves. There's a few. And anybody can draw them anywhere on any time frame. It's not a huge deal, but using them on a 5-second chart, pretty rare.
I had a narrow view earlier. I was being distracted and didn't pay attention to what was going on, or I would have seen that fake out morning star.
Yeah.
Sorry, I was distracted. We had 10 o'clock leading indicators that came out at 10, and that actually the candle sold off on that. You got the natural gas report at 10:30, then you got that 2-year FRN note announcement and 2-year note announcement, bill announcement for 3-month, 5-year note announcement, 52 bill. Well, you got a lot of announcements and bills, and you got a 7-year note announcement. All happen at 11 o'clock with the Kansas City Fed. So
Wow.
uh, that is a lot going on at 11 o'clock, between 10:30 and 11 o'clock. So
So we got lots of dope to deal with.
yeah, lots of dope to deal with. You might get another breakout on that too, another push.
We got a
So,
nice. I mean, if you look at your 5-minute chart, it came out with a nice bar accumulation bar. These two bars are about the same.
yeah, it's
So
beautiful.
good measured move. We saw the entire substructure set up on a 5-second chart, play by play, knowing exactly where we can expect that bear flag to break right there. And no sooner than I could draw that wolf wave, bam, right down the
Lamb,
nose.
brother.
This is how you get your culmination of screen time in, and you start playing with a 5-second chart and a 10-second chart. Even when I was doing futures, this is the kind of repetition that you get, and you get that culmination of screen time, and you can spot this stuff before it happens. That's the whole point of price action, is knowing what's expected on the break. And when it gives you that break, and you've got all the setup built for it, you're drawing all these dumb lines on your chart. They're not dumb.
They're not dumb. We know what they're for, boss man.
And you start seeing the substructure within the longer term price structure, and you get some really great trade opportunities at the very moment they're about to happen. And that's the kind of thing, like, you can get in. Where was the break? Well, the break was the rejection in this case. And by the time I had this structure out, there was the wolf wave. I drew it. And this was your critical support for that. Knowing exactly where to get into that would have been knowing exactly when it attacked this regression line. That's a whole dollar move right there on the ES. Or a whole 10 pointer.
Yes.
And it's like knowing where you can expect that. Even getting a piece of that, you could have got like 40, 50 points out of that real quick.
Yep. I missed it because I was looking at the wrong thing.
Like I said, I'll get TradeStation worked out enough to start using it. At the very latest by the first week of January, but I'm going to try and get it going next week. We'll get back into futures trading. We'll start doing this stuff. It will be fun. So I've got kind of an awkward regression line here, but remember, this is not this structure. This is an extension from a previous structure, but it's still a relevant target. Bam. Next target, regression line down here.
I got that for 3 points, Jeremy.
Nice work.
Using that, the strategy I've been using is you wait for the break, and then you buy or you sell a tick below the close or the low or the high. Like literally, if it was like at what did I do that one at? I think I bought it right on the low at 38.45.75. I did.
Nice.
And then I got it for 3 points down to that 42.75.
When you go a point in like that, it just makes it so that you're much more likely to fill.
It's a safer play, a safer trade.
Right.
But then your stop has to be, at the top of that candle,
Right.
wherever the top of that candle or the bottom of that candle. So that's a pretty big stop. If I did it on a 1 minute, so it's not too bad. But that was basically an 8.25 stop. So it's hard to do for me. That's harder to do in a smaller account because, like I said, I see this stuff. I'm just a little slower. So I've been perfecting, this strategy,
Right.
and using the 1 and the 5 minute chart, and it's working. It's working really well. So it's very profitable.
Yeah, I can agree with that. I'm looking at what Sig was writing there.
I didn't,
1.29% move in SPX. When we get outside of this, the MMs will push it back in. Yeah, they'll stuff it back eventually. That's okay. We got price action to trade.
well, and that's just it. In the there's all these different styles you have, and I'm developing a style that I think's kind of in between, like I said, you and Sig now.
And I think that, like I said, man, you'll probably be faster on the fretboard than I'll ever be. You might have to put your mouse in your left hand to do this, but you've got it built in. You've got that speed built in. You just need to work up the skills necessary to use it. You can't deny yourself that.
Do 10-second chart. What do we got below? It's really not a lot there. What's next? 38, 34. And then below that, you got set that there.
Oh man, I love this. Price action's awesome. Oops, I keep dragging this line over. That's not trying to
I
drag
like
the
it
whole line.
too. Price action is awesome.
Man,
And then when you can start seeing this stuff and the things I have been, working on and contemplating and thinking about, and, so I can prepare some lessons, or
comes another break.
here he goes, is, having targets and having stops are important. You're not going to win every trade, but you can manage your losses a hell of a lot better if you have stops.
Right.
And again, I don't want to. I don't want anything to sound wrong, but you're a fast MF, okay? And you're talking about stuff today just in general. And I've told you this before. Your reflexes are above average. I mean, listen to all the stuff that you can do. Not everybody can do that, Jeremy. So folks have to be careful if they're trying to trade like you,
Right.
because that's like trying to think that in just a couple of months I can learn how to play drums as good as Neil Peart and Rush.
Yeah.
I can play fast like he does and hit
Right.
everything right in time in just a few months. It's not
It's not going to
possible.
happen.
No, it's not going to happen. Two, the other thing I was thinking about, because I've been struggling with some stuff, and a lot of that struggling has been because the market's different.
Yeah.
And the things that I've struggled with are like, whoa, the market changed in the last year. And so even the options plays, they're not there that we once had before.
They
So
take a little bit more finesse, but
it
it's
takes
kind of annoying.
but it's a total different market. So I've had
Jeremy,
to adjust things, and that's why I've been focusing on the futures and the price action. So that strategy's working, and I hope to be able to teach it to folks soon.
Jeremy, I'm kind of sad, dude.
What's up?
I bought a a call at the first consolidation, and I was ready to make a position between an upside or a downside because I was going to convert it to a credit spread or a debit spread,
Mm-hmm.
and I ended up converting it to a credit spread. But when I did that, I can't buy it back now. And
Oh no.
because I guess all they appreciate, like, so I'm locked into, well, if we keep dumping it, the trade loses nothing. I actually was able to sell it for the amount that I paid for the call.
Right.
But I was hoping to sell it prior to that, but the move was so quick.
Yeah, it was
And
vicious.
but it stinks because I wanted to trade, um, price action against that position so that I could get it to either a no loss on the long, or minimal loss at all. But now I'm stuck because they won't give me any buying power, which is lame because I started the day off with like $700 of buying power. So where did all that just dry up from?
Because it's a margin account, right?
Yeah. So I guess because my Costco position probably dropped, and I have some other puts that I guess are starting to fall, that it's losing the buying power that those represented.
Right. It'll leverage against your existing long positions. And unless you're able to take a profit off of one of those trades, you're kind of stuck
I
in it.
could. I'm just not sure if I want to. Like,
That's
I don't know,
kind
my Costco position is getting threatened if we keep going to the downside, though. It would have to move $6 tomorrow to the downside and stay there for me to lose.
right.
Which it could do. I mean, it's in the range. I mean, look at right now, where it made a $6 move just today. But if we do retrace back up, then I will be okay, I think. But my day trade, unfortunately, will probably expire at a loss. Or not a loss. Well, I don't know. I guess it depends on where it goes. My break even is unknown. Okay, that's cool.
I think what you might consider is running a second account where you can do your complex options trades. Whether you're running it on Robinhood or Webull, it'll have to be a margin account one way or another. Where you're running your combinations in that account with more cash in it than anything, so you can have that liquidity to do what you want to do, and you're not locked out of trades like that. Either that, or adjust your position size in your long positions where you can have a little more cash free in the account to work with this. Or the other option is, if you just open a Webull cash account, you can't do combinations anymore, but you can do straight options and you can trade them fast. The only downside that I've found with that is that Webull's options data is not quite as fast as Robinhood's for some reason. I can't figure out why. But just to give yourself a different account to do different things with is the idea.
Yeah.
Here's that moving pivot, I like to call it, the 200 period. We're just outside of, this is my make it or break it line that I drew here. That's why I drew it in red. Essentially, it's when you see a trend like this, and I sloped it because it's got a little bit of volatility in it, but this is a 50% retracement, and if I just straighten it out, it would be exactly at a pivot for a 50% retracement. So I'm expecting to break over here, and the target we're going to reach is probably in this support zone, 379.77. Where I found that is just simply looking at the control bar in this trend right here. So
When he's crossing the 8 on the 2 hour.
Whenever we see a control bar, we know that price will tend to react to it within this range. There's another thing to pay attention to, though. If you were to just divide this out as if it was a wedge, and there is no wedge here, you can't really say that, but you can draw a regression line down the middle of that diagonally and find the same number. This is the proper way to do it is to set up on your control bar and just draw a straight line. But if you were to draw the angular as if it was a regression line, it gets to the same place. And that usually ends up being about down the middle between your two angulars. But this is not even an angular resistance point, so just get rid of that. All right, so we're back above the 200. Now we've got range for measured move up to our angular resistance again, right up here. This is where a lot of people get chopped up. This is the time of day that it happens. Very few dead-on trade ideas will come from this action right here. But we will get this culmination into a break setup where we will have one more good trade, probably just before 11. And we always extend our lines out so we can kind of know where the inflection points are expected to be. And basically just wait for the setup to finish until we get something that accumulates into either a reversal or a break, or a continuation pattern, that is. So like we've had 3 measured moves down, and now we're printing a big pile of dojis down here. So if you want to do the stone thing, I'm going to call it the stone thing. This is the in-betweens. You got
you
2
gotta
of
get the
them.
in-betweens.
And I kind of box in the bodies and the wick. Just run that across the entire day.
That first one is a real important one.
I'm going to try and
That
paint it.
you see the little you're on the 5-minute chart.
There we go. Great. Yeah, there's the 5-minute chart.
Yeah, so that first one, that after that big sell-off, you get that little red candle with the wick into that first sell-off candle. From that wick to the bottom of the candle prior to it, from that top of that doji to the candle prior to its wick at the bottom, that's where I get the in-between. Because that's like that. I would call that a micro pullback, because that wick is the first real pullback after that sell-off.
Right.
See that wick? So it wicks into that prior candle. So, and then it's, that's the first real pause. So I get that one, and you'll find if price comes back to it, we want to pay attention to how it reacts to it.
Right.
Because sometimes it'll come back to it, like yesterday. It hit it a couple of times before it blew through it.
Right.
But if it doesn't come back to it, or it might come back to it, kiss it, and go away, or it might not come back to it at all. So.
And then the other argument is this can also become a very bearish trend day. And remember, there's still unfinished business I keep talking about.
Well, there is. Absolutely.
All the way over here on the 10th, there's that long bar there. We've got unfinished business all the way down to about 375 and 373. That's still on the board, and we're trending today, so this looks like we could hit it. And then, let's zoom in a little bit more. Let's go for a 30-minute chart and look at the substructure here. So we've got a range expansion channel here expected, and if you put a regression line in there, it's right at that regression line right now. I guess I could draw it as if my chart isn't dirty enough already. And we've got, this is angular resistance. This is angular support. Oops. Let go. And your regression line, right in the middle. So whenever you see range expansion, know where it is. And guess what we've got? We've got the left half of a diamond pattern here too, possibly. So we might see a bottom here. And that's why I was getting into the argument of, okay, well, this can either pull back, finish that business, and then bounce out, and then we finally do see a market bottom and we start to trend. Go to the slow melt up to 445. or we break over and, all the doom and gloom takes us down to like 325. Shoot, we've got dope all the way down to like 280, down in this mess. Yikes, I don't want to see that, but it's possible, We just trade the market as it gives us the information. And if we're good at day trading, we become better swing traders, and we know that all of this structure has meaning. There's a lot of different pivot points in it. There's a lot of control points in it. And we break one, we move to the next, break one, move to the next, until it finds a reversal. So trade the chart, ignore the talking heads that are trying to spoof the market into doing things it shouldn't.
Mm-hmm.
Or trying to spoof the crowd into doing, taking trades they shouldn't. You just do what the
And
chart
it's got
tells
me
you
a
to.
little bit nervous because if we get another trend day, or if we keep trending down today, that's really challenging my Costco position that I opened up at break even of 449.03. I was up like yesterday, nearly 80% of that profit, and I was seriously considering closing it, but I was like, nah, we're not going to fall down that quickly, that rapidly. We're going to go sideways tomorrow, and then maybe something will happen on Friday. Nope.
I tend to be so short-sighted on a chart because I love being a day trader. That positions like that I rarely would take. Like I've got some positions out to February on like Tesla and JPM here that I'm just like, maybe I'll take them off. JPM's not going down fast enough, and Tesla's not rebounding fast enough. So
Yeah, I'm considering taking this one off just so that I don't fall into a loss,
right.
But if we rebound today, I could get substantial gains because it's still very well in the money right now. But
Right.
if we do another $5 drop, then I'm screwed.
It challenges it. And that's the thing, like Stone was saying earlier, if you're not sure what's going on, or you are questioning your trade idea, stuff like that, it might be time to just get out of it. Yesterday, what's his name? Dang it. Sorry, I'm drawing and trying to think at the same time. Yesterday Bud Fox was in a Apple position, did very well, and then had good profit on it, took the profit at the right time.
10:30 we have that report.
Throw that on a 30-minute chart. Came up into this with a bullish move, right at the peak. He got out perfectly. And then it kind of ran up just a little bit outside that range. You can see the dope still on the chart there from yesterday. We were looking at this pennant right here. It broke, went slightly outside of it. He would have maybe made another $1. Came off with an $8 profit. But then, at that point, he's like, a little bit of FOMO came in. He started saying, man, I should have kept that open. I'm like, no, this will come back down. Sure enough, it did. And anytime you question your position, that you're trying to decide whether you should get out of it or not, that's about that time. But you got to realize that you've got pretty decent profit on the table here. You were right. You made a good decision. Hanging on to that, expecting it to go higher, is different than questioning if it'll go higher.
Right.
So, when you get these extensions and it starts to walk up, you get good at day trading. You can exactly take the exact moment that breaks down, and you can trade it. You can make your entries and your exits much more efficient that way. But if you don't have the stick time, you don't have the seat time to be able to make those quick decisions on the fly like that, that's when you've got to realize that I need more practice to get that kind of efficiency, and I shouldn't even let FOMO consider entering the picture at this point. So it's like you go in your Costco trade the same way. You're profitable, you're questioning it at this point. You got to wonder, do I take the profit and do something else with this capital? Or do I continue running it? And if you've got the day trading skills to know exactly when to get out of that thing, go for it. But you know, you got to know exactly when to cut it too.
Yeah, I mean that's a steep, very bearish stance.
Yeah,
But then you think about it, and it's like, well, come on,
it's
look at all the days prior to where it doesn't usually make a big dip like that, and if it does, it usually seems to retrace.
right, and they usually do a pretty good job at keeping a 50% retracement on the table. So look a little further left, the bigger picture, and you start to see the things that you need to see. Just like
Yeah, look
any,
left, and then there's a lot of consolidation, and the low point, you know, is 452. But we did just break out of like a, you know, upward channel, which means we could be bearish for a little while.
well, it's also like any other day trading pattern we trade.
Is that actually a megaphone? Like,
It's in a spot where it can be. I mean, it's at the very end of a long accumulation, but this looks more and more like a bear flag the more you look at it until you see the megaphone in it. So you get that megaphone, you got your regression line. If it's going to retrace, it's got to bounce here and retrace back to 458. If it gets outside of this angular support, we get a measured move to more bear side from here to here. Outside that channel, it takes us to the next pivot, 448.30.
And that breaks me. Like that breaks my position entirely.
So, draw that on your chart, and that's your decision maker right there. This line is your decision maker. Okay, do I hold on and wait for it to rebound, or do I bail, take the profit while I can? Because there's still other pivots of control down here to 452.50 right here.
Right. Which I'm expecting it to try to test today, but that's a 2-touch test, and if it doesn't reject, then I lose substantial. Like this is a $5 wide spread,
Right.
And I'm only collecting $1 right now.
Better than nothing. Better than a loss. And that's
right. When I say I'm collecting
decision.
$1, like it was like 97 cents that I sold it for. So it's like I could walk away with the profit guaranteed now, but
Right.
if it rebounds, then I'm losing a lot of
And just keep an eye on it then.
Yeah, because like right now the theta on this thing is 65 cent, and the delta is only 15. So that would have to be a $4 move in the wrong way for me to actually like really get creamed. But if it just like kind of glides to the right, maybe goes up a little bit today, then this position is nearly fully profitable tomorrow, as long as we don't break down immediately at the start.
Right. We just got a
Hey, I took that tweezer top on the 1 minute and I got in on the MES.
Nice.
And
here's your double bottom.
Took my I took my entry at what looked like the beginning of that double bottom, that green hammer.
Good work.
And put it right at the end of it. Bought the bottom of that candle, and bam, got it. Got my profit out. 3 points. Boom.
Good work, man. I was just like talking at the same time I was recognizing that.
Sorry about that, guys. I just wanted to share that with you.
No, you're cool.
That's what I have been working on, Jeremy. That's what I've been working on, and I'm getting ready to show everybody how to do that.
That's how you build that speed and that efficiency, man. That's exactly
I did it on I got my entry on a 10-second chart.
Beautiful, man. We'll make a
I've
speed medalist out of you after all.
I've had to work on it for a long time, So and the futures to me, like I said, it's everything. So it's a beautiful thing. Now we're gonna probably go Wampus till 11 o'clock, and at 11 o'clock I am not gonna be in any trade until after all those auctions and things happen. I'll give it 15 minutes to shake out.
Yeah,
20
just
maybe.
Chill mode at that point.
Yep. All right, guys. I had to. I was quiet, so I kind of took the headphones off for a minute. I was looking at my trade. Looking at making my plan. Here we go.
You did beautiful there, man. That was excellent, and that's how you build that speed. Just repetition. You saw that trade. I was busy flapping my lips over here talking about Costco. No,
this is not. Well, that's just how it is. That's how it is.
That's how it is, and I'm totally cool with that. I love being able to talk, and I couldn't trade this while I was talking about that. I couldn't do it.
I missed it.
But I knew it was there
yesterday talking.
But we don't mind talking. I mean,
No, that's what we're here for.
We're here to teach you, so don't feel like you interrupted or anything. Ask those questions. We love those questions. Yeah. And when I'm walking through it, I'm like literally drawing over here while I'm talking about this. I'm like, double bottom. There's your R1 right there.
Yeah.
I drew a line. there's the break. Bam, target 1, target
Yep.
2, target 3. Just look for the control bars.
We're in a strong bear trend right
Yeah.
now. Just, keep that in mind. If like yesterday, or I think it was yesterday, we were in one of these we had a strong bull trend yesterday.
Yeah, it was a great day for trading futures yesterday and today. Couldn't quite get my map on those 0 days like I was trying to get it into yesterday, but close enough. And the funny thing is when Robinhood auto liquidated me towards the end of the day, and I was like upset about it, it actually got me out balanced. It didn't lose, which was cool. So I'm like, okay, if I'd have hung on to that, I could have got maybe $1 or so profit out of that position, but it's okay. It broke even. I'm not going to complain.
We're at an area 3834 for the MES, and that's another one of those areas where price, those in betweens. A lot of times, what I'm looking for, Jeremy, and everybody, is I'm looking for an area where price has moved fast.
Right.
It's moved away from that price, and it's come back and it kisses, and you can find a lot of that in the bullish or the bearish candles. So a lot of times I'm looking for like a couple of large green or large red candles, and then I'm looking for where they connect, and that's what 3834 was. It's one of those areas, and it's breaking below it now. So look out 38, 27, 25.
Yeah, it's coming right down. There's a little
If it
mini
does
wedge.
break, if it does break that area, now there's another area it's in right now. And matter of fact, the low is the bottom of that channel I have drawn. Actually, 38, 31, 30 is the low. So it would probably be 38, 31, 25. That is the low. It has to break below that to continue to go down towards like the 38, 27, 25.
Right.
Looking at where we are on the weekly currently, and of course the week has to close, is also interesting.
Yeah, it's going to be an interesting point to close. And, everybody talks about the Santa rally that just didn't really materialize. I mean, yes, we had a trend day yesterday, but, that's your Santa rally, I guess. If you want to call it that.
Well, there's some folks out there, and you're one, and it's and that's where I am now. It is they just trade the chart. They don't give a dang about what's going on.
Yep.
Pay attention to news events like we're talking about now, because that's important.
Yeah.
Because you can see those are times you want to just kind of sit back and wait wait for it to shake out and give you the direction so you can get back in and go. But for the most part, if you're not paying attention to all the pundits, all the noise, and you just zone it out and you trade the chart, that's when I do my best. When I listen to other stuff and what other people are saying,
Yep.
and when what all the pundits are saying and all that crap, not that people are saying crap, but you know what I mean. Just you start doubting yourself and you start wondering. But if I don't do that and I just stick to what I know, and that's my goal, is just stick to what I know.
You gotta realize, you just said it in a different way, but you are your own worst enemy when it comes to trading.
Yep.
And the moment you can get over yourself and just take yourself out of the context and put that chart in front of you and just trade the chart, you start thinking about the talking heads, how they try to say, oh, this market's at the bottom, buy this dip. They're talking, and you make the same arguments in your own mind. You're sitting there, this is the bottom, I got to go long here. Instead of just looking at the chart and be like, this could be the bottom, but this is going to give me a pattern I can recognize and just trade. And until you make that transition into being able to just look at the chart and let the chart tell you what to do, take your head out of it and make it into an instinctive move rather than a premeditated move. Sure, you can do all your thinking while you're drawing lines. You know where the areas are, but the actual trading takes place by being able to react to it. And the reaction has to be so fast you can't sit there and argue about it. You just do it. So when you see those breaks and you see that quick transition break right here, for instance, or even back when that wolf wave was there, you go and you realize that your mind saw that before you had time to think about it. And you could have reacted and taken that trade and profited from it in that instance. So what it really comes down to when you're your own worst enemy when it comes to trading is that you're wasting time. You need to react very fast. So when you come to that conclusion that it is a waste of time to think this, and it's much more efficient to just react to it, you make that transition. That's where you're going to build your speed. You recognized that double bottom right there. You recognize that you could take a quick bullish trade right there, and you did. You just did it. You didn't think about it. You didn't talk about it. You just did it.
Yeah.
You know, that's the kind of thing that it comes down to, is being able to just move with it. And that's kind of the thing behind the what I needed to remind myself of when I was just starting to be able to trade these day trade setups at the 1 minute level even, is that I needed to realize that I just need to scalp it. So I literally put it on a t-shirt. I put it in front of me. It became my moniker. So just scalp it. That's all I need to do. I don't need to think. I don't need to sit there and talk to myself about it in my own head. I just need to just react to it. And Nike's thing was just do it. So I was like, this is perfect, because it's a phrase that you can remember very easily. Just do it. You change it to just scalp it, throw the Nike logo on it. Voila! You've got all you need to know about trading in one t-shirt. So just scalp it. You just react. You just do. All right, this is the chop that we're talking about. You don't want to be caught in. This is little bits of trades you can do, but you've got to have that experience to be able to nail these. Like this little double bottom right here, dirty. No real guidance to where the targets are other than pivot points. Tradable for someone who's got a lot of time. Nothing like what this was. This is the choppiness of the market that tends to come right around between 10:30 and 11, and just sit on your hands. Do not overtrade this. You made money back here, keep that money. Don't give it back by getting chopped up at this point. Wait for a clean, very obvious setup. And that's what it is. Like, you see the obvious setups, you recognize it with your lizard brain. You don't have to think, you don't have to argue with yourself. You just do. You just react. You'll see it, you'll recognize it, you'll know what to do. This is a previous pivot point. Right in that control bar. That's cool. There's your 50% retrace under the next pivot.
No kidding. Always remember those.
Yep. Always extend your trend lines out. Anytime you see a line on there, just drag it out. If price action's trading in it, it's going to react to it all the way down the line, all day long. It's always going to be relevant until it isn't. Then when it breaks out of that range, trade the break. You know?
That's so lame. I could have absolutely traded this position down to literally nothing. Like, that call went down to like 7 cents when I sold the short against it. So, I mean, it's a break-even trade as long as it stays below 383 something.
Right.
And I could have completely closed the 383 at like, I think it was like 7 cent. or 8 cent, and then right now it's at 13. So I could have resold it and then probably been in a good enough place where I actually would have walked away with some sort of profit by end of day
Ah,
on a trade that I knew was a semi-risky trade because it was going to break one way or the other, and I was just going to try to play either side. But all of a sudden, all my margin completely evaporated.
it's rough, man. It takes a little wind out of the sail, like I was saying earlier. It's like, don't let it get you down, though. There's other trades to make.
Yeah, it stinks too though, because like that actually, I was trying to sell it for 60 cents, but that break happened so quick earlier in the day, and I was too slow to trade it. And had I done that, I still had some margin, I probably could have like closed this and been in a no loss position entirely.
Right.
Well, right now I'm technically in a no loss position as long as we stay down for the day, but
Here's a break. Going to 378.90. Oh, it reacted. It'll accumulate one more bar before it breaks again. No trade. Sorry. Didn't meet parameters. But you get into enough price action, and we were talking earlier, Stone, about being able to trade that 5-second chart like we do, and not thinking you can do it in the first month. Don't be afraid to do it with paper, though.
No, that's right.
And
Like
regardless
you
of
just don't care.
right, and regardless of that, like a lot of people will frown upon trading paper as if it's realistic practice for their actual trading. That was a nice long. You end up doing things and taking risk management out the window compared to what you do with real money. And there's emotion there. That's the problem, is it's emotion. So paper trade two different ways. First, go into this 5-second chart on the ES or the MES and paper trade all this garbage that you're seeing here. It's garbage to everybody but you, because you can see the little substructure in it. You see the little double bottom. You see the wedge breaks. You see the channels. You see the wolf waves. Practice those over and over and over again on a 5-second chart, day after day after day. And take notes on what patterns have the highest success rate for your trading. It doesn't matter if you lose paper money. Note the good trades. Go look at the good trades and then reference that. That's what you trade best. So you start to find whatever pattern works the best for you is what you're going to be really good at first. The next day, go and look for that pattern and only trade that pattern. And stick it out over and over again as it appears. If you see the pattern, trade it. And typically it's going to be a double bottom is what most people choose. They're just easy. So go into that paper trade the living tar out of it and build that repetition. You won't be able to do this with real money right away for sure. But you're going to build the repetition of knowing what patterns to trade and when to trade them. You're going to be training your reaction brain. You're going to be able to just do it. And realistically, most people, are going to have a hard time doing that at first. But when you make that transition to recognize one pattern and nail it over and over and over again, damn, we're going to all the pivots.
Yep.
So
Got some wicks going on right now at the bottom there.
and we got a nice little.
how did I all of a sudden get $3,000 of option buying power out of nowhere? I don't understand what's going on here.
Because there's no margin call on your other positions.
What did I close though? I don't remember closing anything.
Sometimes when you're in a margin account and things change.
Oh, I see. I closed one of my shorts on Vici because I didn't expect it to, continue on. I was worried that it would drop down.
Right.
So that's cool. I got a new release there. That's nice. So actually, I can trade this this position a little bit and maybe turn it profitable.
There you go. So what I was getting at is just go with the practice of paper first, and the thing you got to realize is, yes, your risk management is not going to be realistic, but you're just trading the chart like money doesn't matter, and that's the whole point. And that's when you detach your emotional attachment to money from your trading, things change. Suddenly, a light comes on. I'm just trading the chart. I don't have time to think about money. I don't have time to think about exactly what this pattern is telling me. I just have to react to it. And when you build that experience, take it into your day trading and then go mess with some penny stocks. Get a couple of 10-cent stocks on your watch list and observe the price action and start looking for those patterns. And trade 1 or 2 shares real money, just really small risk, a couple of dimes, less than a quarter. And pay attention to the percentage that you take in those trades. Practice that for a while. Get a good 2 or 3 months worth of practice just scalping little 10-cent stocks and understanding how you function with real money in a penny stock. And you want to focus on trading profitably. Doesn't matter, nothing else matters, just trade profitably. You want to make money trading penny stocks. It's going to be a penny or two at a time. But just scalp those, get that practice in with real money, and then realize I'm literally trading a chart with real money here, and I'm reacting to it and just sticking to the trade plan and doing it. Okay, and then go back when you're finally ready to get a little bit of serious cash in there. I mean, I'm talking like $400 or $500, not serious cash, but enough to get you started into trading some actual money. And then go back to that 10-second chart on the MES, and go start floating one contract at a time and trading exactly like you did before. Just trade the chart. And dynamically, it'll change. You'll probably actually lose money trading the MES at first. But then at some point, the light bulb will come on and be like, I'm just trading a chart. And there's other things too, like don't revenge trade. Don't try to make money back. Just trade the chart. Everything else will just follow through. I guess I'm kind of done getting in the weeds there. I couldn't quite articulate those sentences well enough to get them out while I'm sitting here watching the chart. But
that's why I write stuff down. When I write it down, it's more succinct. When I process out loud, I'll drive you nuts.
Right. But that whole repetition and practice, that whole repetition and practice thing is the most important part of this.
We got those everything coming up here in about 6 minutes 45 seconds. All those auctions.
I think I'm going to mark out the bullish and the bearish argument with wolf waves. If I can see the bullish one, I'll let you know.
We came back up above that level I had marked out. We've got on the 5-minute chart, we've got
I think I can just...
we had weakening in that bear trend. We're still below that moving average, and we're still below some levels, but it's looks like it's trying to push up. This is either going to be an M top on the 10-second chart.
So here's your bearish wolf wave argument. I can't quite find a bullish wolf wave here. I might be blind. 1, 2, 3, 4 would put it there. About the closest I can get. That's not my best wolf wave, but let's go with it. Yeah, it's actually inside the land of probability. Met it twice.
See if we're going to go back to that low.
Yeah, we're starting to thread over. Boom, here it goes.
We did M-top on the 10-second chart.
Yeah, it was beautiful. Broke right through the critical support. M-tops are awesome. And they're so easy to draw. Like, you can basically just throw a pivot on there right there at the bottom. There's your M-top critical support right there. You break that, game on. And usually it'll retrace this price action leading up to it. And it'll probably sit there and inflict on all of it. So like, you draw those pivots out, it'll revisit them. There's a range. There's a range. There's your 20 period as well. Neat stuff, man. I love it. But like I was rambling on about, man, you get enough of this practice under your belt, and dude, it's just it becomes just a natural thing to get out of your own head and just trade what the chart tells you. Love being able to do that. That is pretty awesome. All right, well, I'm going to say goodbye to our friends on YouTube.
Bye, friends on YouTube. Bye, friends.
Got about an hour of wisdom there. If you like what I did with some price action here, and I dropped a lot of knowledge in this little broadcast today. You know, like and subscribe, but go tell your friends about what you just saw today. Some of them might be impressed, some of them might not. But you know what? That price action was simple to me, and if it's simple to you, awesome. If it's not, if you're still learning this, share, learn it forward. If you got some friends who are trying to learn how to day trade, just today's little broadcast is going to really help them. I will see you guys tomorrow. Have a wonderful afternoon.
Everybody.